Welcome, everyone, to our next episode here of The Next Big Thing. I am Chris Gennady, Global Head of Research at Wisdom Tree. I think the last time I did this, and maybe some of you actually took the time to listen, I did a solo episode talking about quantum computing, which it's an exciting topic. I won't say it's an easy topic. I won't say it's the easiest thing to wrap one's head around. Again, there are quotes from the likes of Richard Feynman and Niels Bohr that indicate if you really understand quantum computing, or at least you think you do, you've then completely missed it. So again, that was one of the latest episodes, and I hope you enjoyed that, or if that's an interesting topic for you. Today we wanted to make sure to talk about what's been going on in what we've seen over the thematic space. And as you can see on the video, I'm by myself again. We have a very busy internal team taking very many trips, and ultimately sometimes our thoughts need to get out there, but we don't always have multiple people. We've got some interesting guests on the schedule coming up, but today, either fortunately or unfortunately, you can let me know in the ratings. It's just me. And so something, as we sit here recording on November 17th, something that it feels like we have to talk about is the volatility that everyone globally, has been seeing in the quote unquote AI trade. And we have to first think, what is the AI trade? Well, the AI trade is something that, and to give ourselves the appropriate context, it all started, quote unquote, November of 2022. What happened in November of 22? Just to briefly review. Well, ChatGPT comes out, and we don't know at the time. You never know at the time. Oh, this app's going to come out, and in 2 months, 100 million people are going to be using it. That's what did happen, but at the time, it was just sort of an interesting, funny, potentially kind of sort of useful chatbot. Got involved in some memes, kind of went viral. But the funny thing is, you don't know at the time, even when it gets 100 million users, you don't know what path something like that's going to take. And what was interesting to see is the path it ended up taking was not more the funny novelty social media path. It was a path where it felt like throughout much of 2023 and going into 2024, each time you would listen to an earnings call or see a report about an earnings call that a company was given. And usually these earnings calls are the CEO and the COO and the CFO, and everybody's getting together. What are they talking about? Well, in ChatGPT got them to talk about, we need to adopt AI. And the funny thing about that is, looking back with the benefit of hindsight as we sit again in November of 2025, probably at that time, it was more, and sometimes, again, you say certain things, they're not untrue, but you say them because you're almost in a position where if all the other companies and all your other competitive peers are saying it, you also have to say it. But at that point, there's no way that people could have realized the difficulty and the fact that implementing an AI system strategy project into your workflow such that it actually adds value is not something you just snap your fingers on. Like, it's a lot easier to, at that time in 2022, 2023, say, can you write me song lyrics in the tone of the play Hamilton, for instance? It'll do that. Text will come out. We can debate if it's good or bad or indifferent, but text will come out. Automating someone's job, that is not the easiest thing. It's actually usually many different tasks. They're all sort of jumbled together. And we only learned with time, and with those 100 million and then more users coming into the system, we only learned about things like hallucinations and all the rest. But what happened in the market, and I admit, I wish at that time And the funny thing is we have to think of NVIDIA from an honest context. NVIDIA, there are a lot of books that have come out recently. Jensen Huang is an incredible visionary leader, CEO. It's 1992, 1993 when the company starts. 1999 when the company does its initial public offering. I think the offering price might have been $12 a share. So as I say that, myself included, and everyone listening is probably saying, "What the heck was I doing with my money at that time?" Now I have to be honest and say I was 15 years old at that time, so maybe I didn't have any money, and that's my excuse for missing the Nvidia IPO. But you sort of see how Nvidia goes along, and they're really a graphics processing unit company, which at that time is very focused on video games, things like Quake and Doom. If you sort of look back and you say what video games sort of changed the paradigm and sort of evolved the capabilities of the space, and then you get to 2012 when in 2012 Jeff Hinton, Ilya Sutskever, and Alex Krzyzewski up in Toronto essentially partake in the ImageNet challenge and see a step change upwards in results. And what were they doing? They were using NVIDIA GPUs to run a special or specifically designed neural network that suddenly was able to recognize images in this ImageNet database that Stanford and Fei-Fei Li had put together. And essentially that opens the door to sort of this new era of accelerated computing. Now, the funny thing is 2012, that's not a typo. That's when it really happened. It took until 2017 for the Transformer paper. People might know of it as Attention is All You Need. That was done in Google's research department. And OpenAI, through those years, was sort of getting started. Elon Musk was involved. Dario Amodei, the current CEO, leader of Anthropic, was involved. Sam Altman was involved. They were all together at the start. It was meant to be more of a public benefit type situation, not necessarily the for-profit company that it is today. And they start coming out like ChatGPT that we know is roughly GPT 3.5 because if you remember, there was a GPT 4, there was a GPT 4 with the little zero. There were all these different iterations of the model that came out. So obviously there was a 1, a 2, and a 3 that did come out, didn't really generate a lot of attention. 3.5 is the one that goes viral. I say all of that to note that we all wish, even if we missed the NVIDIA IPO, even if we missed 2012 when you sort of had the AlexNet moment, as it's called, even if we missed the Attention is All You Need paper in 2017, we still had an opportunity on the launch of ChatGPT to go all in on NVIDIA. And this has sort of been the first leg of the AI trade. And we at Wisdom Tree, we don't necessarily think that first leg is necessarily over. But obviously, it's harder and harder for NVIDIA, the company, to continue to put up triple digit year over year share price performance returns. So that doesn't get any easier when you're 5 trillion in size. Just think about that. A 5 trillion market cap company is what we're talking about here. But it's sort of emblematic of this idea, similar to how when people went to California, you could go to California in, I think it's the 1840s, 1850s, and say, I'm looking for gold. Or you could go to California and say, I'm going to sell the picks and the shovels and the tools to the people who may or may not find gold. I'm going to sell to them the equipment. So at least I know I'm going to make some money. I don't know if they're actually going to find gold. And so, in a sense, the picks and shovels of AI are largely semiconductors, servers. People may have heard of Supermicro. People may have heard of ASML. They may have heard of Taiwan Semiconductor in the public discussions. And so the first leg of the AI trade from, say, 2022 into 2023 starts largely with the picks and shovels, the semiconductors, the hardware that allows for AI to get to where it is today. Now, what people want to do, and you see it, all the sell side research firms, they put out their version of this, is they want people thinking phase one of AI is this, phase two is this, phase three is this. They like that sort of clean narrative, and they want to keep. I mean, what do they really want? They want you to keep coming back, and if you're a big investor, they want you to keep trading shares. So to trade shares, you have to be thinking, oh, it's changing. I'm going from phase one to phase two. I got to redo my portfolio and trade more stocks. So you know that there's an internal underlying motivation to get people thinking, I need to go from this to the next part of the AI story. Now, I think personally, this is my view, looking at this stuff, thinking about this stuff, reading, past instances, and we were talking on the Wisdom Tree has a number of podcasts. We were talking on Behind the Markets at our last recording that we do with Professor Siegel and Jeremy Schwartz and all these people. And if people think, and we're sitting here again in 2025, close to the end of the year, and people think about e-commerce as an example. Now, many people listening are familiar with e-commerce. They likely use e-commerce. They've seen how you go from signing up to Amazon Prime and getting free shipping. Now, I think in the early days, it was free shipping, but it wasn't necessarily we're going to deliver in an hour. Like now, certain things on the Amazon website, they're delivered to you in an hour, which and this doesn't even you don't even need to be in, New York City or London or some of the biggest cities in the world. Like you can be in a second tier city. You can even be in a town and get some stuff in an hour. So you've seen e-commerce change a lot. Some listeners might feel like they do most of their shopping across the board on e-commerce. Others might still enjoy or feel like going to the store. There are certain benefits, and I know one of the benefits is it can be significantly cheaper. To if you're doing groceries, for instance, you can have the groceries delivered. That's an option, but you see how much more they charge or embed in the price versus if you just show up at the store and do your thing and don't mind waiting in the line and maybe scanning your own things. It can save a lot of money. And so you're thinking about all these things, but the idea of e-commerce is a great idea. It's been one of the biggest ideas that we've seen. And I was looking into it last week thinking, okay, it's got to be 25-30% minimum of retail is e-commerce. And the figure that came up, and there's always multiple sources and ranges. So the figure that came up was somewhere between 15 and 20%. It sort of depends how you measure it. And I'm sure certain countries could be a bit higher, certain countries could be a bit lower. But by and large, even with the success of e-commerce and the fact that Jeff Bezos, as an example, the quintessential example of e-commerce, starting Amazon in the 1990s, few companies have done e-commerce as well as Amazon. At that point, think Walmart was the undisputed leader in retail, and today it's sort of Walmart and Amazon. And depending on what you're seeking to measure, Amazon is actually bigger in a lot of categories. And so you step back and think about that level of success, and think about still roughly 80% of retail is not yet e-commerce. And we'll see kind of how those numbers continue to evolve. But we're talking about 25-30 years of progress, and the adoption of e-commerce, as big as that space is still not even quite 20%, again, depending on how you measure it. And so a lot of people might have been assuming, oh, it's got to be at least 50%. It's because we have the if you were looking at me, I might be over 90% e-commerce. But again, me myself, I don't really mean that much when you're looking at a society, when you're looking at aggregates. You have to recognize the totality could be very different than your own personal experience. And so you think about something like AI, which we're here to talk about today. uh, you feel how easy it is in certain jobs. And my job at Wisdom Tree is very focused on coming up with ideas, thinking through ideas, experimenting with ideas. Frequently, the output of that ends up as some form of text, video, audio, all of the above. And something like ChatGPT or Gemini or XAI, you name the model, is very useful because you can throw ideas at the model and it throws further things back at you. And some of the things may be absolutely without value and without merit, but then some of the things might be amazing. And the key is you have to keep going back and forth and treating it not as it gives you one answer and it's absolutely correct. You have to treat it almost like I'm working with a fellow employee that may not be as experienced in the topic that I'm looking at, but they have a boundless energy and curiosity and they're able to surf the internet and find things that I may not find. And so working together, it's that same principle as you saw certain chess matches where you had only the computer or only the person. But then when you had the expert person and the computer working together, that was the best result, sort of augmenting the experience. And that's sort of what it feels like certain kinds of knowledge work have gotten to. But you go to certain not every country is the same, not every company is the same, not every industry is the same. I've traveled, to Germany, for instance, and it's not a foregone conclusion that every company that I speak to in Germany is just automatically using some form of AI, and the ones that are might have it, ring fenced, so it's their own proprietary system. In my experience, Germany is an example of a place where data and data privacy is held in an extremely high regard. Why do I feel like I notice it? Well, if I am sitting here in the United States, I wouldn't say data privacy is held in zero regard, but it feels like in the United States, it's very much health data is absolutely sacrosanct. So nobody can mess with that. Financial data as well, absolutely sacrosanct. But data in general in the United States is not treated the same way as you might experience in Germany. And one example of that is the companies. And one of the things we'll have to debate, and I certainly have some ideas on this, and as a society we'll debate, is you think about the way in which, whether it's Amazon, whether it's Alphabet, Meta, how all of these companies don't require you when you log into the Facebook account or the WhatsApp account or the Instagram account for that first time. They don't necessarily require you to, pick up your wallet, get the credit card, input the credit card number. Like that is a very different experience. Like if you know, okay, I'm going into this thing and I know that I'm subscribing to something, it's going to charge me money, that is one type of experience. A lot of these giant platform companies have pioneered, and I do purposely say pioneered because even if today it doesn't feel like it, 20 years ago, it was pioneering a new business model where they basically recognize, wait a second, I don't want them to feel like they're paying, them being the customer up front. I want them to feel like my service is free and they're just putting in whatever they want and they put in enough data, suddenly I can predict everything that they're going to buy, everything that they're going to want, everything that they're going to do, and I can advertise better to them. And it's important to keep that business model in mind because one of the things that happened in the last week is people were putting out research reports, and you don't know until you have the benefit of history what's right or what's wrong or what's, the absolute truth. And in investing, it's very rare to find the absolute truth. But when I see people taking a company like Meta as one example, but you could think of all the platform companies in this way and saying, you know, they spend a certain amount of capital expenditure towards AI, and then you step back and you say, how much money do they earn on specific AI things? And all the bar charts, you probably don't need to Google or use AI or whatever too hard to find them. All the bar charts will say they're spending this much, huge amount. They're making this tiny amount. The return on invested capital is terrible. It's a horrible idea. How could they possibly do this? And in some cases, they even say it's time to short the stock. And that was Dr. Michael Burry as one example of a prominent figure that made some great trades around the time of the housing bubble in the great financial crisis of 2008, 2009. Movies were made literally about him. And so he's had a lot of success and talking about, it's time to short some of these companies. And yet my thinking is, wait a second. If Meta is reporting as part of their earnings call, for instance, that they're keeping people on the site. So people are keeping their eyeballs because what is Meta's business? They take your eyeballs quite literally, and they want them focused on very specific things. And the more time that they focus billions of users on a monthly basis on those things, they make more money. And that's exactly what they reported. So you sort of step back and think, yes, they're investing all this money in AI, and they talk about their llama reasoning models, and maybe 2025 was not the best year for the llama reasoning models specifically, and maybe they talk about super intelligence and the super intelligence lab, and they have Jan LeCun, who in the last week there were headlines he might be going off on his own, starting his own company. Which could be great. We'll have to see what he does. Very Turing prize winner, etc. So you sit there and think Meta, in terms of the specific AI stuff, is having sort of one experience. But Meta, the broader business, which is based on, again, taking people's eyeballs, attention, focusing them on specific things, is going incredibly well and showing incredible amounts of growth. Now, why is it showing that growth? It's not showing that growth because the army of people, they have, tens of thousands of employees. The people are not doing this. They had the year of efficiency a few years back. Over time, they've noted that they've, made certain positions redundant, less and less people to get more and more work done. AI is being used to run more and more of the core business. And so one thing I sit there thinking is, why do we say they invest all this money, the quote unquote AI specific stuff isn't working yet? And that's not to say it'll never work. It's just it's not working as well yet as people might like to see. But AI being applied to the core business is going amazing. And in a sense, when you look at the company and you think about, is Meta a good investment or not? Is Alphabet a good investment or not? You have to think of the whole company. It's not their AI stuff is over here and that's separate from an incredible core business over there. And so the thing I caution people when they do talk to me, not everyone talks to me, but when they do, is just have in mind that maybe the phase that we are in today, which semiconductors were a key part, again, the picks and shovels, the giant magnificent seven companies, quote unquote, that we refer to them as, have had great initial returns in sort of the first part of all of this. Yes, they're spending a lot of money currently, but yes, they're also getting incredible business results. And that doesn't mean there's no risk. That doesn't mean the capital expenditures are exactly right. We're not going to know that for numerous years into the future. But for the moment, I think the key thing that we have to keep in mind when we're thinking about is this a bubble? Because it's not just is this a like the word bubble is another one of these words that is almost in every other headline. And when I think of bubble, the first thing I think of is I go back to, the great financial crisis. And again, movies have been made about this where people with basically no income are able to be approved on 5 different mortgages. So if you see something like that where it's like no income, 5 different mortgages approved, we've got something up here. If you go back to the 2000, the tech bubble, you see a bunch of companies, pets.com, emblematic of the rest of the list. And you basically say, .com in the name, incredible valuation, rush into the IPO market, and there's no earnings, there's no revenues in some cases. Is there even a business? Who knows? But again, .com in the name, who cares? So these were times where, yes, it was clear there was a certain distribution of risk that was not in favor of the end investor. If you look today, the hyperscalers are spending a lot of money, but the hyperscalers and the Mag 7 companies are also much, much, much larger. Like, we're talking about NVIDIA, which has eclipsed at various points here 5 trillion in market cap. So a 5 trillion market cap company. I know a few weeks ago we were hearing about NVIDIA as one example committing to a potential investment, and I say potential very specifically, of 100 billion in OpenAI. And you step back and you say, "Oh my gosh, 100 billion." And I remember I'm sitting there in 2008, the US Congress as a reference point when they approved the TARP, Troubled Asset Relief Program. And this was the famous thing that was initially rejected and then passed. That was 700 billion. So it was 700 billion passed by the US Congress in 2008 to quote unquote save the financial system. And now NVIDIA announces a potential investment over the coming years of 100 billion, 1/7 of what was required to save the financial system in that initial vote. And I know more was required over time with the Fed and everything, but that initial vote, 700 billion, and now Nvidia announcing over the coming years 100 billion. But Nvidia over that period of time has grown to a 5 trillion market cap company. So 100 billion on a 5 trillion market cap company is very different than 100 billion on a much smaller company, or 100 or talking of 100 billion in 2007, because the market has naturally gotten larger and larger and larger, so we're just naturally talking in much bigger numbers. But it's important also to have in mind first and foremost that, and frequently the idea of circular revenue comes up, and in the NVIDIA OpenAI announcement might have been the first or among the first, with the Oracle OpenAI announcement, which also has gotten a lot of attention. And we have to note that, and we talked about this on our recent recording of Behind the Markets, and we'll see over time. Oracle is a very interesting company to keep watch of, because what they're doing from a business perspective, in a sense, you might have thought a year or two ago was not even possible. Because you look a year or two ago, if I said hyperscaler, most people would think Alphabet with Google Cloud, and they were actually the small player. Then you had Microsoft, who was sort of the up and comer, and you had Amazon Web Services, which was the market leader. So Amazon Web Services has been the biggest for some time. Uh, Microsoft Azure was growing incredibly fast, and Microsoft kind of stepped back, at least from some of the things that they were planning to do and build and lease. So they're still large, but they've slowed their rate of acceleration in terms of growth. Google Cloud is seeking to increase its rate of acceleration in terms of growth, but it's far behind Azure and Amazon Web Services. And what Oracle has catapulted itself into is sort of the discussion as a peer amongst those incredibly large three public cloud infrastructure companies. And the way that they did that was they basically became the key cloud provider for the compute infrastructure for OpenAI, but not necessarily OpenAI today as we sit in 2025, basically saying we are going to put a certain amount of gigawatts. When we say gigawatts, 1 gigawatt is roughly, when you put the chips, the Blackwell chips, or whichever chips you put in there, it could influence the price a bit. But if we're saying the current version of NVIDIA chips are Blackwells, you're putting the Blackwell chips into a gigawatt scale data center. When all is said and done, that's a roughly 50 billion expense. If you're talking about 20 gigawatts with all completely operational, that's probably a roughly $1 trillion expense. So if you're hearing $1 trillion or you're hearing 20 gigawatts, you should be thinking in your mind that's roughly the same thing. A gigawatt of power is roughly the city of San Francisco in terms of, think of all those people turning on, doing their normal stuff. That's roughly a gigawatt. So a gigawatt is basically city worth of power. But instead of powering a city, you're saying, I've got all these servers and I'm just going to power AI training, AI inference. Inference is when people are all using the model. Training is when you're thinking about doing the research. to build the next model or to improve the model. And so you hear those terms often thrown around, but essentially, Oracle indicated, okay, today in 2025, we're in a compute shortage in that companies like OpenAI or Anthropic or you name them, if they had more compute to use, would the models be a bit better? The companies indicate to us that yes, they would. Would the service provided to the users? Now, one way of better is you get better answers. So you could be in a position where the model itself has improved and is actually better. And that's one way it's better. Another thing that can happen is you're getting more out of the model. So you can run, people frequently talk about tokens. Tokens are just units of input and output into the model. So if you're able to, as an individual user, run per unit of time more tokens through the model, that's another way the model can be better. And if you had more compute resources, you can do that. Depending on what you're doing, that could be very beneficial. You could get your answers faster. That's lower latency. That's another discussion that people have, and it's actually a big discussion because if you think about where you locate the actual computers that are doing the calculation, if you located them, say, not saying people are doing this, but there is a debate, should you locate them in space? Now, what's good about space? Well, space is really, really, really cold. So the cooling resource, which is a big part of the energy usage, if data centers were in space, the cooling resource need would not be probably your biggest expense. Now, you'd be thinking about other things, obviously, because you're in space, but the cooling would be less of an issue. If you located your data centers in Greenland, not saying people are going to do this, but Greenland as well can be quite cold. Now, the issue is if you live in, say, Texas, and you're asking a question to a model that's in Greenland, what do you have to start thinking about? You have to start thinking about the time that the signal goes from Texas to Greenland and back after the computers run their magic and you get your answer. And so you're in this position where, depending on what type of situation, is it a car driving down the street? Okay, we probably can't send the signal to Greenland if the car is driving down the street. But if it's a different situation where you're just a knowledge worker and you don't mind if a deep research project, quote unquote, takes 15 or 20 minutes, then yeah, you can send your answer to somewhere quite far away, but where it might be cheaper to get the electricity, it might be cheaper to run the cooling, it might be cheaper to source the land for the compute infrastructure. Thinking about data centers, one of the key things you have to think about is where they're located. Uh, if you're located in Virginia, in the United States, Virginia is one of the densest areas for data centers, but quite expensive. So if you're saying, I need my data center to be located in Virginia, you're going to pay a premium. If you don't mind where your data center is located and it's in the middle of deserts next to a natural gas facility, you're going to be able to get your energy that much cheaper, and the land is going to be that much cheaper. And so it's something to think about. And people in the data center world they talk about this, but the ideas of latency, the ideas of compute, all of the debates and discussions are on the table. But the key thing to have in mind, and the reason that I keep coming back to as we sit in 2025, the markets can always be volatile. Can prices go down? They absolutely can. But you step back and say, is it because of a bubble? To me, a bubble would indicate we're just building compute and we have no idea who's going to use it. We have no idea if it's the appropriate amount. We have no idea if there's demand. And every time, last week, there was a great interview. As one example, Satya Nadella, CEO of Microsoft, was talking for an hour and a half on the Dwarkesh podcast. I recommend, if anyone's interested in this stuff, you can hear it from me or you can hear it directly from Satya Nadella. And the key thing, or one of the key things, was when they're making a decision to, say, lease compute resources from companies like Nebius or CoreWeave, they're not making that decision to just be ready in case. They're making that decision because they know there is that amount of demand in the system waiting for compute resourcing. This this is very important to have in mind because it would be a very different type of scenario if we were putting the GPUs into these systems and they were quote unquote dark GPUs. There are no dark GPUs. People relate this to when people in the 1990s going into 2000 tech bubble as we know were laying down the fiber optic cable and they, let's say, built too much. Now, relative to today, did they build too much? No. But relative to what was needed at the time in 1998, 1999, 2000, 2001, they built very, very fast. And people would discuss dark fiber, meaning the light, because the way the information goes through the fiber optic cable is photons and light. And there didn't need to be any photons going through a lot of the fiber optic cables. So it was quote unquote dark fiber. And so, are there any dark GPUs today? No. Everywhere you look, and you can listen to Brad Gerstner on the BG Squared podcast talking to Jensen Huang a couple of months ago. He's saying the same thing. He's basically seeking to service the predictions of demand from all the big hyperscale customers, and his experience so far has been they they estimate what they need. He seeks to provide something around that number, has never failed so far in getting to that number. And so far, that number has always been quote unquote too low, meaning they're estimating what they need, they underestimate, and they end up in, as he says in that particular conversation, scramble mode to try to do their best to get even more capacity. And you look at a Taiwan Semiconductor, which was in the news last week, and Taiwan Semiconductor is in a position where they're being discussed as being more pragmatic, being a bit slower in some of their capital expenditure investment. So it's not to say when you look on the relative scale, is Oracle a bit more aggressive in their capital expenditure in the near term? I'd say, yeah, that's fair. It's fair to say Oracle is being more aggressive, seeking to deploy more resources more quickly relative to, say, a Taiwan Semiconductor manufacturing company. Doesn't mean one is right or wrong. Doesn't mean immediately we should worry about Oracle today. It's too early to know if we should worry about Oracle. What we have to see over time, and one of the most important numbers I keep coming back to, and Brad Gerstner himself talked about this a bit in a number of podcast discussions. He basically said, first of all, at the end of this year, 2025, what do we expect from OpenAI? And he's an investor in OpenAI. Altimeter, the fund that he manages, is an investor in OpenAI. So when you're an investor in a private company, you're getting different kinds of information, in my view, than necessarily the public might be getting. So we depend on people like Brad Gerstner and Sam Altman and others for our information, because if it's a private company, you don't necessarily know all the detail. But they've indicated the end of 2025, the annual recurring revenue to OpenAI should be around 20 billion. And I think the most recent official figure might have been 13 billion. So in the past week or so, you might have seen 13 billion here, 13 billion there. I mean, it's a crazy valuation. If you start trying to put rationality and say 500 billion valuation, 13 billion annual recurring revenue, it looks crazy. And I'm not disputing that. But if we actually end 2025 at 20 billion, that's step one. Step two is, what do we do, or what are we expecting to do potentially in 2026? Now, the figure that's been thrown out there has been, in 2026, you go from 20 to 50. So it's slightly more than a double in terms of the annual recurring revenue. So it'll be very exciting if a year from now, and that's the great thing about recording these podcasts, you step back and you say, okay, 1 year out, let's go to the recording, because it's going to be sitting there in Apple Podcasts and Spotify for all to see. Did that result actually come through. I don't know if it's going to come through. It's possible. One of the things I think with OpenAI is subscriptions are kind of one thing. I'm going to take a sip here. One sec. The subscription business, which I think is the bulk of the 13 billion to 20 billion, wherever it is as we make this recording. But if you say we need to get from 20 billion to 50 billion, I think you need different revenue streams, creative revenue streams beyond just subscriptions. Yes, you can probably get more subscriptions, but if the idea and Sam Altman himself years into the future has indicated there could be hundreds of billions of revenue, which again, I completely cheer for that. It would be a very interesting world in which to live if these new companies go from where we see them now to hundreds of billions of revenue, but it's not a foregone conclusion. And so one of the things you have to think is, are they going to do something that looks kind of sort of like in-app purchasing? Meaning you are doing research. I'm going on a vacation to a location. I'm asking ChatGPT all these questions. It's giving me these different answers, these different suggestions. Maybe I take some of them, I don't take some of them. There is a model that gets discussed of people do all this research in large language models, and then when it comes time for the purchase, they leave the large language model. They might go to Google or they might go to the specific app, and they buy the thing that they were researching somewhere else on the internet, but somewhere else on the internet. What if they were buying within the ChatGPT app? What if within the ChatGPT app, similar to credit card payments, there was a certain percentage that went to OpenAI because they gave you this useful information? You ended up using it to make a purchase. And maybe now that purchase is 1% roughly, let's say, more expensive because you opted for the convenience of purchasing in the app. I know I was talking earlier about opting for the convenience of groceries being delivered. I think that's much more than 1%, if we're honest about it. So electronically doing research, buying something that much more quickly, that much more easily within the app. Maybe that's a revenue stream. Another revenue stream could be advertising. That's kind of the hesitation, if you hear it in my voice, is basically that's what all these companies have used AI and machine learning for the better part of the last 10 or 15 years. The reason, they quote unquote got to their first trillion in market cap in many cases was content recommendations and advertising, and people feeling as though they didn't need to take the credit card out to use certain online services, but at the same time, money was being made in the background, and the data that was being collected on those people was so valuable that, again, we look and we see, the classic example is, Gmail. If you have a Gmail account, you don't necessarily get the credit card out when you first sign up, but if you were to say, "Oh, they're just giving this to me for free," that also doesn't make any sense. And there are a lot of different services that are like that. So content recommendation and advertising, does OpenAI go there? I don't know. I don't know if they go with in-app purchasing, but you sort of sit there and think, how do you get to hundreds of billions in revenue? And how do you get Sam Altman, a very smart guy whom I deeply respect what he's been able to do so far, uh, at the end of the day, saying, what's a credible path to hundreds of billions in revenue? I personally don't think subscriptions on their own get us there. But the reason that this is all important is when we say OpenAI has committed, and I don't know the exact number. I hear sometimes it's 1.4 trillion that gets reported. I know probably there are certain assumptions that go into, well, we're going to count this amount of this deal and this amount of that deal. The tricky thing is all of these deals are in the future. So Sam Altman is not wiring if you said, can OpenAI today wire 1.4 trillion anywhere? Absolutely not. OpenAI today is a massive money losing operation, meaning if we think somewhere between 13 billion and 20 billion, and then how much does it cost to run the compute infrastructure? It costs a lot more than 20 billion. to serve all the things that the users are doing. And so, if you were to say, well, are they generating positive free cash flow to be able to spend any money on anything? No, they have to keep raising money from a variety of sources or doing these sorts of deals that might allow them to raise more money, and that's how they kind of keep things going until they ultimately scale their revenue. And we have to respect we're watching something that we've never really seen before, a company that in a few years goes to roughly a billion users, maybe a bit more, and sort of figures out a way to monetize something that didn't exist. And when I say didn't exist, generative AI, at least in the public's perception, did not exist before the end of 2022. So we're just now, as we sit in the chair, do this recording, we're just now getting to roughly 3 years. And will they be able to monetize this effectively? It's a very, very interesting question. It's not a foregone conclusion, but historically, these companies, and when I say these companies, the technology industry as a whole, we collectively, society, was not that confident in Amazon's ability to monetize what they were doing. They proved us wrong. We were not necessarily sure of what Google was doing in the early days, proved us wrong. Facebook and the idea, when they're in the public markets in 2011, 2012, were we saying, "Oh, what a great business"? We absolutely were not saying that. So we have a long history of maybe expecting a lot in the short term with these companies, and these companies over 5, 10, 15 years have repeatedly proved us wrong in terms of them being able to grow. But something I also think is OpenAI is kind of perceived to be the first mover in a particular domain, in a particular space, one of the hardest moves to make. Facebook was not the first mover in social networking. Google was not the first mover in internet search. One of the hardest moves to make is to actually be the first mover and continue to have that advantage go and go and go over multiple iterations. The reason I'm so impressed by Microsoft, as one example, is the company essentially starts in the 1970s, and what Microsoft has been, and they didn't necessarily get it right 100% of the time. They didn't make the quote unquote right decision in every single case, but they've been able to reinvent themselves enough times over a long enough period and capture enough of the key waves of change in technology that they remain one of the most valuable companies in the world. What does it look like when a company is maybe less able to adjust? You can look at Intel, which in recent months has taken on the government, the U.S. government, as a shareholder. I never forget how the Intel CEO at the time, Paul Otellini, was asked by Steve Jobs, "Do you want to provide the chip for the iPhone?" Just think about that. Now, would I have said yes? I have no idea. I mean, the iPhone in the mid 2000s, 2005, 2006, as it's being developed, is not the iPhone that we know today as one of the best businesses that was ever created. But you step in and you see what does it look like if the leading CPU, central processing unit company, basically misses the mobile compute revolution, basically misses the social networking side of things, and has so far not necessarily proven itself in full anyway on AI. And that's sort of where you go when you look at Intel, who was the market share leader, the leader in CPU chips for probably about 20 years. Andy Grove, if people have heard of him, one of the greatest tech CEOs ever. Everything I've learned about him is remarkable and amazing. And so, look, I think one of his books is called "Only the Paranoid Survive." I guess Intel was not quite paranoid enough in some of those particular cases. And keeping an eye on the clock. I know we don't have unlimited time to spend today, so there are a few other key things wanted to just mention. So we talked about Oracle. Oracle had such an incredible share price move sort of on the initial announcement of the remaining performance obligation, which could be around half a trillion today, depending on the day that you look and how much and how it's being measured. Now, the key thing is it's not a guarantee. It's not a guarantee that OpenAI is able to do it. But if you're taking odds on that, it's also not a guarantee that they're not able to do it. And if Oracle is mostly right on that move, they will catapult themselves into the upper echelons of being a hyperscaler and serving some of the biggest compute workloads in the world. So it's a very interesting investment. A lot of these big companies, it's sort of funny how things change. And maybe Oracle wasn't the most emblematic of this particular case, but you read various articles and you say, okay, the cash balances are going down because they're spending all this money on compute. But a few years ago, the cash balances are going up. We weren't necessarily saying, "Oh, it's so great, the cash balances are going up." No. What do we end up saying? We say, "Oh, maybe they should pay a dividend. Maybe they should raise the dividend. Maybe they should do a buyback." Like, we never, as people on the investment side, we never say, "Oh, that just looks great." We're always critiquing, we're always thinking, if the cash is going up, why don't they have opportunities to invest, or should they be paying it back out? If the cash is going down, I don't know if the cash is going down for the best reason. So it is fascinating to see an interesting area of potential return, that area being AI, where the cash balances of these companies are coming in handy. But at the same time, you don't know for sure until you have the benefit of hindsight exactly if the timing and all the various details were exactly right. Now, one of the more fascinating things that I want to note, and I didn't know this was going to happen. There was a book that came out earlier this year where what it did was it basically compiled Warren Buffett and Charlie Munger's shareholder meetings going back roughly 30 years. And what it did was it basically structured a variety of discussions so that what you're listening to is quotable moments from Warren Buffett and Charlie Munger over a 30-year span. And something that's stuck in my mind is I heard them discussing Google as a possible investment. And they didn't make that investment back then. But the way that they would discuss it, and in some of the different contexts, and I don't know exactly what year they were saying this, but it was sort of taken from a number of different years. They were basically saying what Jeff Bezos did with Amazon was amazing, but they were giving themselves a pass on not necessarily investing in Amazon. But then they said, Google, they should have seen it. And the reason they said they should have seen it is they were using Google to advertise Geico. And Berkshire Hathaway is a big Geico investor and has been for a very, very long time. Warren Buffett's history himself, looking at Geico, he was learning about insurance float and the insurance business. And so very, very focused on Geico for decades. And using Google's advertising platform, what they were saying was we could have made an investment in Google because we're seeing the results. We're seeing what we pay. We're seeing what we get for what we pay. And we're recognizing that for Google to serve customers in this manner through ad impressions has a roughly zero marginal cost to Google to serve that next customer once the system is up and running as it is. Now, over this past weekend, we essentially got to the 45-day. There's something in the U.S. market called the 13F filings, where if you're a big institutional investor like Berkshire, what you have to do 45 days after the end of a quarter is you have to just basically disclose your major public equity positions. And they disclosed that they have a big investment, maybe not as big as their Apple investment, but they have a significant investment, multiple billions, in Google, which is fascinating because, again, you look at the history of Berkshire Hathaway, it's not a history where you see all these different tech investments that have done so well. You see mostly old economy, industrial economy kind of investments, some of which have done amazing, some of which people critique. Warren Buffett's retiring this year, so there are a lot of articles that critique the more recent track record and all of that. But it was fascinating for us to see the filing and the reports on the filing about the Google investment. And the fact that they're continuing to sort of pare down the Apple investment, which is one of the greatest, if you judge it by the amount of cash actually made, one of the greatest investments ever in terms of the amount of cash they actually made in terms of gain on that investment, and parlaying over to Google. And we don't know if this is the end or if they're going to keep adding to Google. At WisdomTree, we've said for numerous months that Google might be among the quote unquote Mag 7. So in some documents, you might see it as Alphabet, but basically same concept, is among the cheapest on a valuation basis of the Magnificent Seven. And there's now it's gotten more expensive in recent months because there were certain antitrust trial results and certain other things, and a recognition that Google is not as flat-footed as people might have thought in terms of if people search the internet in different ways, does that mean Google's business completely goes out the window? Absolutely not. And when we look at it and see whether it's the Meta results, whether it's the Google results, this idea of using AI to keep the traditional advertising and content recommendation businesses going on firmer footing. Both of these companies, whether it's YouTube, whether it's Instagram, whatever leg of the stool you want to look at, both of these companies are using AI to great effect. Google is interesting because they also have their own chips. They also have their cloud platform. They have a lot of different engines of profitable growth humming along. And in our opinion, it remains one of the most interesting AI companies out there. So again, seeing Berkshire make that investment was quite something. And the last bit of news I'll note, one of the themes that we talk about on this podcast and on other podcasts is cybersecurity. And you saw in the last week Anthropic being used, at least by some nefarious actors in China, to do some less than favorable things in the electronic domain. You saw a White House report from Alibaba potentially being used by China's military. I don't know, 100% of the full detail of either of these cases. As a public investor, you know what's reported, but you recognize sometimes it can be very difficult to fully attribute things in the electronic domain. It may take time for the more official reports to come out, but by and large, what it made me think of was the fact that as excited as we get on whether it's robotics, physical AI, as it's sometimes called, cars that drive themselves, these different chatbots, large language models, whatever the case is, we cannot afford to become relaxed from a cybersecurity perspective. Doesn't mean that every cybersecurity company just goes up and to the right. That's certainly not the case. But recognizing that every time you're adopting a new service, you also have to think, where's the data going? You also have to think what types of security procedures and practices are ultimately in place. All of that, it never goes away. And so with that, I do have to state the following. To clarify, the views and opinions expressed in this podcast are those of WisdomTree and myself, and are subject to change. Anything we present in this podcast is not intended to be relied upon as forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or a solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. So I hope you've enjoyed spending the hour with me. Please keep looking at the feed, subscribing to the feed, because we've got some very, very interesting guests in the pipeline covering a variety of themes such as defense. I know we probably owe the audience another defense-focused episode. And, we're going to keep, whether it's Mobeen, myself, and others here at WisdomTree, we're going to keep focused on all the interesting developments and things in technology.